Dan Deming of KKM Financial is here to start off our week with a trader rundown, and we love having you on Mondays because you always tell us what's ahead, Dan.
Well, thanks, Al. It'll be an interesting week this week.
It will, because we're coming off the jobs number. And,
absolutely.
you know, is the market telling us that maybe the Fed won't be so quick to move because the jobs number came in with some weakness?
I think that's part of the reason why we're seeing the activity in the markets right now. Yeah, I think a lot of people are trying to figure out exactly if and when the Fed is going to move. And given the weakness that we saw on Friday and that jobs number, again, that kind of puts the camp, I guess, the onus back in the camp of not moving in June. So June 15th, I think all eyes are on that. But right now, when you look at the bond prices, the bonds are not really indicating a 10% chance right now of a rate hike. 10% chance of a rate hike in June right now.
What are you watching in the S&P 500? What are some key levels?
Right. So last week, the market really pretty disappointing week for the market overall, although not that significant. It was probably healthy for it to give up a little ground. It needed to take a breather from the big run up from February. So we're seeing a little bit of weakness here. We're watching a key level in the S&P, the SPX, at 2040 right now. We broke below that 50-day moving average at 2047, tested the 2040 level late last week. So that's in the area where if we break below there, then we could see it actually go down and test the 200-day moving average, which is around 2013.
What's holding up this market? Because there seems to be some resilience happening there. I'm a big believer. I always think that people are too
glass is half full.
Doom and gloom. Yeah. Yes. And I always think that the market wants to go higher.
It does, because that's kind of the natural catalyst of when you have the flow of money coming in, particularly, again, like you said, and you brought this up, interest rates. If they're going nowhere, then where are people going to put their money?
The stock market.
Exactly.
Now, we do have retail numbers coming up this week. Could that be a market mover?
It could, yeah. Certainly, the earnings cycle is still, it's still in there. We've gotten through most of it, and the market's kind of, I think, basically gleaned what it's wanted from that and has moved forward now, looking at maybe the economic conditions, the interest rate environment, and what's the Fed's going to do in June. But ultimately, we do have some retail numbers coming in, and that will give you a clue into the consumer, and the consumer certainly drives the economy. So, yeah, I think it could definitely influence the market as we move through this week.
Dan, thank you for your outlook.
Thanks for having me.